Okay, good morning, everybody, and welcome to earnings season kickoff. I'm really excited for this event today. We've got Mary Ellen McGonagle, president of MEM Investment Research and a fellow StockCharts.com senior technical analyst with me for, I don't know, a couple years over at StockCharts. Mary Ellen, it is great to have you here on the show. How are you doing this morning? Make sure you get unmuted there first. Well, maybe Mary Ellen is getting her beverage. I can tell you that Mary Ellen and I go back a ways on StockCharts TV. It was on Fridays. She would come into the show and she would join me for What's Hot, What's Not. That was kind of our signature segment during that show. It was really awesome to have her on the show with me. Mary Ellen, I know it's really early out there. How are you doing this morning?
I'm doing great. I'm sixes and sevens in the earnings world. No, I'm fine, thank you. And I figured out how to unmute myself, so you got your sidekick here.
Yeah, no problem. You're more than the sidekick. You're the kick. I'll be on the side.
Okay.
Yeah, I was just letting everybody know, our background a little bit working together over at StockCharts. We always had a great time on the show. So when we kind of came up with this idea, I was really excited, and I know Mary Ellen was really excited. Kind of a little reunion for us to get back together and do this.
Yeah, and what better time? It's in the throes of earnings, and we all know the criticalness of the power that earnings can have in really driving a stock. And I have to say, I've been pleasantly surprised that we are having a really great season so far. Lots of companies coming in ahead of estimates, and the market's responding nicely.
Yeah, I think, there's no doubt earnings drive the market. And I think Fed policy also drives the market. There's a lot of folks over the past several years that have questioned things that the Fed's doing, but really, you don't want to fight the Fed. The Fed continues, even though this Fed's been a little bit slower maybe than some of the others. I think this Fed is now turning more accommodative, and it's going to be hard to hold the market back when you've got strong earnings and you've got an accommodative Fed that wants to continue to keep this bull market humming along. So I think it's an exciting quarter. I think that earnings season, as you said, Mary Ellen, starting off with a bang. And so we're going to get into all of that in just a couple of minutes. One thing I do want to start out with is just to give everybody a little sense of what we do, because we do have quite a bit of work that we do throughout the day, and just want to make sure everyone's aware where you can find us and when. So I'm going to share the screen here for one moment. And if you go over to StockCharts.com, you can go into articles for one, and under the Stock Chart blogs, you can see that Mary Ellen has a blog, MEM Edge, so you should absolutely go over and check that out. I have a blog, Trading Places, and now I'm not seeing let's try this again. Maybe it doesn't want to show my blog. It's really a good blog, I swear. Let's try it a different way. Let's see, here we go. So you can go in. I actually posted an earnings-related gap blog article this morning because we were going to be talking about earnings today, so I wanted to feature that. But you can go over to Trading Places. I post usually every morning. I think I did miss yesterday. I don't usually miss. But normally I try to post every morning, sometime before the market opens, 8, 9 o'clock, something like that. And again, you've got Mary Ellen over at MEM Edge, so check that out. On StockCharts TV, we actually have shows that we do. We don't do our shows together anymore, but I kind of look at it, and what I told Mary Ellen, what I talked about on MarketWatchers Live is we've got spinoffs. So Mary Ellen's got her show that you do a show with Aaron, Wealthwise Women, correct?
Mm-hmm, that's right. That is on Thursdays at noon Pacific time.
Okay. Yeah, I saw it on here, the schedule this morning at 9. I was like, this is going to be interesting. She's got to do two webinars and shows at one yeah, but this is a replay. This is a replay of the show that you did last with.
That's exactly right. Last Thursday. And yeah, we like to keep that really loose and inviting, and we have a lot of fun on that show.
Yeah, and of course, Aaron was my other co-host over at MarketWatchers Live when we were doing that show. So I know the two of you very well, and I know it's a great show, and everybody should definitely tune into that. Of course, I do Trading Places with Tom Bowley on Tuesdays and Thursdays on StockCharts TV. You can also come into Earnings Beats. It's a free show. I do Monday and Wednesday from 9 to 9:30. So I do cover Monday through Thursday, the half hour leading right up to the opening bell, going through earnings, going through economic news and news of the day, and going through various areas of the market, sectors, industry groups, and so forth to try to get you up to date on what's happening technically in the market. So please tune into our shows. And I think with that, I'm going to go ahead and I think maybe we can go ahead and get started here, Mary Ellen. Let's go back and take a look at the agenda if we can. Erin, my daughter, works with us here at Earnings Beats. So if you'd like to pull up the agenda, yeah, here we go. All right, so this is what we're going to do today. So we're just went through a little brief introduction for everyone. We are going to go into some earnings reports, recent earnings reports. So Mary Ellen's going to go talk, I don't know, 7-8 minutes, give you a number of earnings reports that she has seen, the reactions to those reports, and is going to go over some of the stocks that she's really interested in with these reports. I'll do the same. We're going to talk to you a little bit around 9:20 or so, going through our trading approach and what we do, what I do at Earnings Beats, what Mary Ellen does over at her business. And then, so we'll probably each just talk about that for about 5 minutes. And then we're going to go into what I consider maybe the meat, and that is what we're looking for going forward. And I know, Mary Ellen, you might have some other topics you want to throw in there. That's fine. To go over the ground rules here, there are no ground rules. So we can pretty much follow and do what we want. But this is the general agenda and what we're going to try to follow to give you our thoughts on companies that have reported and then also on companies that will be reporting. And if we've got some other things to throw in there about the market, you know, all the better. So with that, Mary Ellen, I'm going to go ahead and let you take it away. What are you seeing, or what have you seen with earnings so far?
Yeah, it's been
your screen.
You bet. Okay, so what I am going to do first, this is something I like to do as far as sharing the power of earnings and just give a really strong sense of just how critical earnings is. And hopefully you can see my screen. I'm sharing with you an example of a winning stock. So this is a weekly price chart. It's taking us back to 2015, and this is one of many stocks out there that have experienced significant uptrends here. This is 2017, had a little bit of a falter here with that bear market action and then took off again. And the reason I'm showing this to you is this stock is RNG, Ring Central, one of the many successful software stocks we've seen. So each one of these arrows is representing the week that this particular stock reported their earnings. So going back to the beginning of 2017, earnings, stock drives higher, earnings, and repeat. And we can see that these companies that come out with these strong earnings can really drive these stocks higher. My background, I worked with William O'Neill and Company for 15 years. And as you may know, Bill O'Neill is the founder of Investors Business Daily. He's all about uncovering these huge, big outperformers. And in his study, going back to well over 100 years, there were common characteristics in these big winners. The number one driver is earnings. These big earnings put forth these companies that come out and have triple-digit 1,000% moves. So really, really important to really have a good sense of those higher earnings types of stocks. So that's a bit of background just to help get you a little more interested in earnings season and paying attention to really how these companies are coming in. So we did get this week about a little over 90 companies have reported, and a couple of things that I noticed, and that is the fact that these industrial stocks were the ones that are rebounding the most. They're having the largest in the way of gap up. So this first stock that we're looking at here is Dover, DOV, and we can see the stock gapped up in response to earnings. It's up about 6% on the news. This is from yesterday. of course, the markets aren't open quite yet. So we can see that the stock, the company did report numbers that were about 6% ahead of estimates. They were, so this pushed this particular stock out, and it is now poised to break out of this nice long base. So let me just go ahead and take a moment, mark this up, and give you a sense of what I'm looking at. Because when these stocks report these numbers, and we see this nice gap up here, and take a look at this volume. The volume characteristics are huge. So when a stock breaks out on earnings similar to this, and the numbers are good, oftentimes this can lead to a nice leg up. Of course, it's all going to depend on the broader market dynamics. But interestingly, again, is the fact that we are seeing these industrials come out. This particular stock is right at that 101.38, which is the prior high. So it is poised to break out of this saucer-like base. If we see a nice continuation today, of course, that would be quite constructive. Let's take a look. I have a couple of probably about 5 of these industrial stocks that we can take a quick peek. This next one is a stock I actually wrote about it. You can read it today in Don't Ignore That Chart, one of the blogs on StockCharts.com. Not your most attractive looking chart. The stock, this is BMI, Badger Meter. They do make meters for water flow control, not the most exciting industry, but the stock had been in a real downtrend. You can see going into earnings, analysts were not looking for much. This company had really strong earnings this same quarter last year. So you want to, of course, look at year-over-year growth. There was not a lot of anticipation that the number was going to be quite good. They did beat, and the stock gapped up 10%. But if you go ahead and read that blog, if you get a minute, and I'll just share with you very quickly, what I pointed out is this is your 1 hour chart, 60-minute. I don't use that 60-minute intraday chart that often, but when you are trading stocks after they gap up, they really can be quite powerful as far as pointing you toward whether that, in this case, after a gap up, is the uptrend going to continue. So we can take a look going back to daily charts. I'll share with you a couple of other of these names that really did have come in with nice numbers, and the markets are responding. Now this is Crown Holdings, CCK, they're a packaging company. These guys came out and they actually missed on the earnings and revenue, and management guided higher. So go figure, the stock did gap up anyway, but we can see where it closed down here in the lower portion of its trading range for the day. So not very constructive, big volume here. That said, we do have this positive, I like to use this relative strength indicator up here on the top. It's a momentum indicator. You want to look at not only the slope and direction, but the actual location. So it's up above this neutral 50, so we are in good standing. This is a daily price chart. Take a look here down at the moving average, convergence, divergence. This is a momentum indicator. You want to pay attention to the black line as it crosses up or below this red. In this case, it crossed up above the red. This is a momentum shift indicator. So this downtrend has been reversed. So interestingly, we do have some solid positive dynamics taking place. And if we have time, we can take a look at historically one of the better ways to play these gaps up on strong volume, because they really can be the beginning of a nice upward move. We can take a look at another name that came out. A lot of these seem to have reported yesterday. This is Watso, WSO. The company came out with record earnings and sales. So we can see again, this is that type of very constructive, not only action, but it's creating a very positive chart. A lot of the work, I like to look at stocks that are breaking out of these bases. I think I need to go back to my drawing school. I'm going to leave that. Sorry.
I'm not sure what that is, but that looks bullish. It looks bullish to me.
Oh my goodness. But we can see this nice gap up here. Take a look again. Now, I'm pointing out this volume because it's indicating that institutions potentially are in there supporting the stock. The surprise was positive. They like it. This is when analysts then come out and revise their estimates higher after digging in and taking a look. But it did break out of this base very nicely. The RSI and your MACD had that nice positive signal crossover. So again, interestingly, a lot of these guys are in the industrial space that are coming in, and they are surprising to the upside, and the markets like it. I do have other stocks, but Tom, I think I need to hand the baton over. I have
Yeah, I mean, that sounds good. I mean, I think and it's really interesting you talked about the industrials, because Mariana and I did not talk about stocks. You know, I even said, you know, if we talk about the same stocks, don't worry about it. But my focus today is going to be on the industrials, and I'll go into that in a little bit, maybe with the next segment. But right now, I'm just going to go over some stocks that I've seen that I think look pretty interesting with the way that they have responded to their earnings. So let me go ahead and show you the first one, which is Thor Industries. Now, this is one that reported a few weeks ago. So not all of these have reported this week, but they've certainly reported recently. Here you can see right at the end of September, Thor had gapped up. Look at the volume coming in on the stock. This is what I really like, is when you see a stock gap up, it doesn't get all the way back down to filling the gap and then turns right back up again. I think this kind of a move indicates to me that there could be some accumulation taking place. When you go down and you look, recreational products, this is one of the areas that's really starting to gain some strength, trying to make an absolute breakout there. And look at the relative strength of recreational products versus the S&P 500 over the last 6 or 7 weeks. It's been going straight up. So this has been a favored area of the market, and now you've got a company that's coming out with good results. The market likes it. We're gapping up. Pull back for a little bit below that 20-day moving average, and then right back up again. So Thor Industries is one. Another one that I like in this space, in the recreational products, that also reported and just reported this week, is Pool, SCP Pool. And you can see the huge gap up yesterday. Now, from a volume perspective, I normally like to see a little bit more volume. I would say this one averages probably 200,000, which is kind of my threshold. I'd like to see a little bit more, but there's no doubt that this gap up was on massive volume. I think maybe after coming back down, maybe it'll fill that gap before it turns back up. But if recreational products continue to do well, I think you can see the market was really impressed with this report, going from about 201 to 228 on the open. So that's 13% increase at the open. Of course, when you gap up, and everybody wants to buy in, a lot of times you've got market makers on the other side of that trade that are shorting. And that's why a lot of these gaps will fill. One of the things I find particularly bullish is when a stock gaps up and it doesn't come back down to fill, if it keeps going up. Because if you understand the market, and this was a little bit of my blog article this morning, if you understand the way the market works, when everybody's buying, market makers are on the other side providing liquidity, and they tend to make money. That's being a little facetious. They make money. They don't lose very often. They'll lose on some trades, but overall they make money. And so you have to recognize that as a trader, that when you get those market makers on the other side of the trade and a stock pulls back, a lot of times you will then see a later push back to the upside. I'll give you an example of what I'm talking about here with Helen of Troy. Helen of Troy reported recently. And look at this gap up. Everyone who chased on emotion, the stock was at 159 and change. It opened up $10. Everybody's jumping in. Look at this volume, and look what happens. Guess how much money the market makers made? They were on the other side of this trade. This is why a lot of these stocks will pull back. When they don't pull back, like back in April when the stock gapped up, look at this. This is incredible demand. Then when it slows, you'll get a pullback. But notice we never went back to fill this gap. I think the top of gap support is where you really want to watch for. In this case, Helen of Troy never even got back down there. But you can see the stock's got a history of these gap ups. And I think now it's starting to turn back to the upside. And when I look at it relative to its peers, well, here's its peers breaking out to a new 52-week high. Its peers have been kind of like recreational products. We got the durable household products moving up here relative to the S&P for the last 7 weeks or so. And Helen of Troy has been one of the leaders throughout. So this is the type of company that I would be very interested in. And it's also one of the reasons why I won't buy right at the time it gaps up, because I don't know which way it's going after the gap. I like to evaluate if it comes out and has a candle like this. Obviously, I would have loved to have gotten in at the open, but I don't know that. Here's an example where we go straight up after the open. Here's an example of how we go straight down after the open. But as Mary Ellen was pointing out, when you get these companies that report strong earnings, here is what happens over the longer term. It's going higher. It's trending higher. So the idea is to try to find the best entry point into these stocks. All right, a couple of others I'll go over quickly, and then we're going to talk a little bit about what we do throughout the day, which is a lot. But McCormick, I think McCormick looks interesting. Look at this gap up with earnings. Straight up, nice hollow candle here. That to me suggests, and it's on very heavy volume, one of the heaviest volume days of 2019. It continued up the next few days, and now it's all of a sudden starting to pull back. I think as it gets closer to maybe 155, 157, 158, it may just come down to the top of that gap support. I think that's when you start seeing a better reward to risk entry. So MKC, I think, looks pretty good here. Let's see. One other, well, it's hard not to go into the home builders. I mean, they have been on fire. Lennar reported, look at this report where they gapped up on their big volume, continued moving higher. Any of the really strong home construction or home building stocks, when they pull back, look at the 20-day test. Every time the stock gets back to the 20-day, it rises off of it. I think Lennar is one of the stronger home construction stocks. It wasn't 3 months ago, but you can see heading into this report, it was building strength. And then with the report, it's even gotten stronger. And if you go down here, you'll see Lennar relative to the S&P breaking out. And then down at the bottom, this is home construction relative to the S&P. It's a lot easier to find winners in the market if you're looking in industry groups that are outperforming. So home construction benefiting by a lot of things: modest growth, an accommodative Fed, low interest rates. Home construction continues to be a strong group. All right, I think what we'll do now is move on to just essentially what it is that we do each day. So Mary Ellen, if you want to talk a little bit about MEM Investment Research and what you do and what you try to do for your subscribers, take it away.
Sure, yeah, I'll go ahead and share my screen here for just a second. And you can take a look here. This is the first page of my website. So a lot of my work is surrounded around what I call my MEM Edge report. This is a bi-weekly report. So I'll give you a little quick peek here at my most recent report. It's about 15 pages long. It comes out on Sundays. So I talk about the broader markets. That's going to be the really primary driver of the rest of the report. We want to make sure the markets are healthy and where they may be headed. And then from there, I get into the various sectors and discuss not only where they are currently, where the strength is within that given sector, and all the while discussing stocks that are on the suggested holdings list. And then from there, I go down and have a summary as far as the outlook, what to look out for next week, what's coming up, new buy ideas, and then here's that list. So within this list, the outlook is kind of mid to longer term. I want to keep you in that stock, but then each week I'm going to tell you whether it's in a strong buy zone or not. And the return numbers are really quite exceptional, as this is through August, the annualized return relative to the S&P. So it's all about outperformance. And then a lot of the work too is coursework, learning how to trade. Always creating new courses based on what is going on, whether it's sector rotation, stocks that are pulling back, how to play that pullback, and so on. So I do have a trial promo. For those of you, you can go to meminvestmentresearch.com. Take a look. You can get 4 weeks of that MEM Edge bi-weekly report. There's a midweek report that comes out. This week I did a Monday alert on some new ideas that emerged. So you can try that out for $7 for 4 weeks. And just a great way, particularly during this earnings season, to get insights on companies that have reported where the strength is and new ideas as they are added. So that's a big part. And then, of course, also doing a lot in the way of the blogs and shows and just sharing my knowledge. I really enjoy it.
Awesome. Yeah, I would absolutely suggest and recommend everybody take a $7 trial. I mean, don't really have a whole lot to lose, $7, and see if the service works for you. I'm going to go ahead and show you a little bit about what we do here at at earningsbeats.com. We used to be Invested Central. And so I'm going to start over here first. If you go to our homepage and you're not signed in, you will see here a subscribe to the free Earnings Beats Digest. This is just a free newsletter, costs you absolutely nothing, comes out Mondays, Wednesdays, and Fridays. Normally we'll do a pretty brief article just talking about a stock, showing relative strength. It deals with earnings, sometimes gaps. I just like to think of it as an educational type of a newsletter that helps you maybe get yourself familiarized with some of the things that we do at earningsbeats.com. And again, 3 days a week, every week, no cost. So that should be a no-brainer. Make sure you go ahead and sign in for that. As far as our paid subscribers, I would say maybe one of the key pieces, we have a few different things that we do, but one of the key pieces is a daily market report that gets sent out every day. It normally comes out sometime in the 11 a.m. Eastern to 1 p.m. I try to do it 11 a.m. to noon. Sometimes it might run a little bit late depending on what's going on. But you'll see that it is a very lengthy report. Here, if you come into our site, you're not a member, and you go up and you hit on the About Us, this will bring it up. And under Our Service, you can click on this sample. So you can see at the top, I do an executive market summary just to give you a very quick snapshot of what's going on in the market, maybe if there were any economic reports, how our alerts are doing, because we do have alerts for our members that we will issue from time to time, just very, I'm not going to say very short-term trades, but I would say anywhere from, it could be a couple of days to a few weeks that we tend to hold, maybe even a little bit longer depending on the market. After that, you can see the market outlook. So I normally will have a chart. Here I was talking about the transportation average and how important this area of support was back at the beginning of October. If you click on the chart, it'll give you an update, and you can see that support held. We made a big bounce on the transportation stock. So that was pretty timely information. I go through sector industry focus, strong earnings chart list. You can see Lululemon making the gap up here, coming all the way back down to this gap support, also getting close to trend line support. So we try to give our members an opportunity to maybe look at some potential trades. You can see here, Lululemon bounced right off of that and went higher. Let's see. And a number of times what I'll do, the strong earnings chart list, by the way, is a chart list where I go through all the earnings reports, just like Mary Ellen and I are kind of doing today. Look for the best reports, the ones that beat top line, beat bottom line, and look good on their charts technically and are liquid, meaning that they trade at least on average a couple 100,000 shares a day. If they do all that, they go into the strong earnings chart list, which throughout earnings season does adjust in terms of the number of stocks on there. I would say there's always at least 100, and like right now there's 307, but that will be going down as we take off a lot of companies that will be reporting soon. But it can be anywhere from 100 to maybe 300-400 stocks on that list. And then what I try to do is I will run scans against them, and I'll give you the results to the scans, and many times show you these charts to give you opportunities to perhaps trade if you like these charts. There's another one, Service Master. That one came right down to support. You can see bounced, got up near resistance, coming back down. But I think you're getting a sense of some of the things that we do. Here are current alerts. We actually loved Roku when it got down here to around 100. There was your gap support from earnings. It got overdone to the downside. Everyone panicked, and we used that to our benefit. We were looking for it to come back just to the 20-day as a trade, which it did pretty easily. And if you've been following it, the stock's now back up near 140. Roku was a super trade for us. Zimmer, here's a perfect example of the way I like to trade gaps. So here's Zimmer coming down to test the top of gap support. We're not thinking it's going down here to the bottom. So if you click on the chart since then, you can see it bounced right from there and started moving higher. And the beauty, when you look at stocks from a reward to risk standpoint, if this stock closes below 130, we're out. So we're not willing to risk a whole lot, but if it returns back to the upside, which is what we're expecting, you can see that we've got 10% just back to getting to those old highs. So those are the types of trades that we like to make. Northrop Grumman actually got stopped out yesterday because we ended up raising the stop to 360. They report earnings in another couple of days. They report earnings next week. We didn't want to hold into earnings, so we raised the stop. We got stopped out yesterday. I think we ended up losing 1 or 2% on it. It was not a big deal. And then today's movers, another section of the report. So just going through other stocks, I can tell you Kansas City Southern, I was on a show at benzinga.com the other day, and I was asked about the earnings reports. And I said, this probably isn't going to be too exciting for a lot of you out there, but Kansas City Southern is one of the reports that I wanted to watch very closely. They just reported this morning, by the way, and they blew the numbers away. Stock was trading up very strongly, but this was a company came down right to this support area, and if you click, look at what it did. Right off of that 126 level, came up. Look at what it's doing today after earnings. So this is a live chart now because we're past 9:30. Kansas City Southern just absolutely exploding. And the reason that I really am interested in Kansas City Southern, it's part of the transportation group, and I'm going to talk about that in a little bit. But you can see a lot of charts. I get into upcoming earnings reports, economic reports that are out. And if you go down here at the bottom, I've got 5 days worth of samples you can go back and take a look at. So for instance, on this one, I'm not going through this whole thing again, but in the market outlook here, I was giving a big picture. So we really try to set the service up, not just for short-term trading, but also for big picture, longer-term investing. And I believe that the S&P 500 is just getting started. I think we are in a secular bull market that is going to rival the last two secular bull markets where we went up for 20 years. I think the entire decade, the 2020s, is going to be strong. Maybe a cyclical bear market along the way, 20% drop, but they tend to be much quicker. You can see here, 87 crash. Here, this was a cyclical bear market in 1990. That's what I think we're going to be looking at going forward. And it was very similar to what we saw in December in the fourth quarter of 2018. But anyway, that's the primary part of the service. But we have a lot of other things. We have portfolios. I'll just show you real quick. This is a portfolio that was started back in November of last year. This is the model portfolio. Every 90 days, we put in 10 different equal weighted stocks from different industry groups. And this is how it is done since November of last year. It's up 46.92% through yesterday's close. The S&P during the same period up 11.42%. So that's a little bit of a different service for those maybe who don't want to watch the market every single day. And let's see, the active trade alerts, I talked a little bit about that, but we send those out to members, give them price targets, stop loss, and entry points. And then strong earnings chart list, which I discussed a little bit earlier. So I don't want to take up any more time. We got a lot of earnings to go over, but if you are interested, we do have, Mary Ellen, a $7 trial for 30 days. So you can come in there, you'll find it all over the website, but check it out. $7, 30 days. I think you'll get a lot of value out of it. All right, so we are going to move on now to upcoming earnings. And there are a lot of reports, Mary Ellen, coming out over the next weeks. Which ones have your attention?
Yeah, we can take a look. I do want to say, boy, that Roku trade would have paid for a year's worth of your service right there.
Yeah, that was a good one. That was a good one.
Oh, my goodness. And I'm going to share a stock that's in a bit of a similar position that it is due to report in the sense that it got a bit oversold. But let's take a look. Before we get into what's due to report, I did want to touch on one phenomenon that takes place during earnings season, and that's the fact that when a company comes out with really strong numbers, you'll see this what I call add-on effect, where other stocks in that group will start to pick up. So what we're looking at here is Sleep Number, SNBR. The company came out with numbers earlier this week, surprise to the upside. Take a look at this nice advance following that report. But if we just take a quick look, TPX is TPX, it is the other mattress company. Tempur-Pedic. And we can see, take a look, this stock has gapped up. It is breaking out of a nice 2-month base. They're not due to report for another week and a half. So you may very well see that. Tom talked about KSU coming out with good numbers. JBHT is another in the transports, came out with good numbers, gapped up. And again, oftentimes you will see these other companies within that given group, even if they haven't reported yet, they're going to start to respond in anticipation that the dynamics that may have pushed that one stock higher could in fact spread. So that said, let's take a look, because as far as companies that are due to report next week, and Tom, a lot of well-known companies that are going to be coming out, Amazon, McDonald's, we can name a number of them, but I am going to take a look at one stock that is coming out next week. This is Boston Beer, and it's Sam Adams, SAM is the ticker symbol. So let's take a look at the stock's performance in this first part of the year. Certainly from this April low, we can see the stock was in a very significant uptrend, and it had everything to do with the company's introduction of these very, very popular carbonated beverages that have alcohol in them. They're very low calorie, lightly flavored, big source of revenue for Boston Beer. This drop here is because competition came in. Another company came out with their version of this carbonated beverage, alcoholic beverage, and the stock really dropped. You can see it dropped from 440 down to 340, huge, but it is picking up here a bit. The company's due to report next Thursday, so keep an eye. We can see that the stock currently has now broken up above these key simple moving averages. Your RSI is now positive. We did have that nice moving average convergence divergence crossover here, and then once it breaks up above zero, it's even more positive. So keep an eye on this one. They are due to report again on Tuesday, and it is reminiscent. Let's take a look, because Tom showed you Roku when they put it on, and that was down here. Take a look at this nice advance. Now this is not quite earnings related, but it's the same concept where the stock was doing really quite well, gapped up here on earnings. Competition came in and the markets really overdid it on the sell-off side. Looking at other names that are due to report, I'm going to take a quick look here at Behemoth Amazon. And this is a stock that had been on the MEM Edge report earlier in the year. It had a very nice advance. This is that May correction in the markets. But more recently, Amazon really cannot get out of its own way, for lack of a better word. I know hope is not the proper word to use when you're trading, but really I was looking for this stock to resume that former uptrend, but not the case. Once your stock breaks below, in this case, I have this blue 200-day simple moving average. That is pretty much time to reconsider your position, certainly if you haven't sold it on this break below that 50-day. But let's take a look at the action here currently. We can see that the stock is potentially reversing this downtrend, breaking back above these simple moving averages. Your RSI and your moving average convergence divergence are positive. So this is constructive. They are due to report on next Thursday. However, two things. I do not trade right before earnings. I will trade potentially a week or two before if you're seeing estimates being revised upward. That's one of many of those secret tricks, if you will, if you want to get a sense of companies that generally do surprise to the upside. If analysts are raising estimates going into the report, that's bullish. In this case with Amazon, analysts are revising their estimates lower. So of course we will not know next Thursday when news comes out. Let's take a look at another well-known name that is due to report next week, and that's Tesla, TSLA. This is a daily price chart. The stock is really close to breaking out of this nice base. It does have constructive technical action above these simple moving averages. RSI, your moving average convergence, divergence are both positive. the company's due to report on Wednesday. And oftentimes it can be quite helpful to take a peek at how the company has reported in the past, because history can be quite telling. If a company does have precedence as far as reporting to the upside, you want to be aware of that. However, this is their most recent report back here at the end of July. Take a look at this gap down, big volume. The stock really was in a go nowhere position subsequent to that. So we can see that certainly in the most recent quarter, they came in below estimates. So it'll be very interesting to see how Tesla, of course, reports. And there is another area, and we can look at a couple of companies that have reported already this week. This is UNH, United Healthcare. This is in the managed care space, and we can see the stock gapped up, came in ahead of estimates. Management really had some bullish comments to make here, so we can see that this UNH is potentially reversing its downtrend. Very interesting. We can see the RSI and the MACD are also positive as the stock breaks up above these key simple moving averages. So eventually you may get this downtrend reversal in play. But we can look at another managed care company that is due to report on Wednesday. And in this case, analysts are revising estimates up. Take a look at how beaten down. A lot of this is there are political headwinds with the elections coming up. The concept of insurance for all is really hurting a number of these stocks. But this is another name. Again, they are due to report next week. They are potentially reversing their downtrend as some of those headwinds are dying a bit in here. Tom, I'm not sure how I'm doing on time. I can, of course, keep carrying on, but there is certainly one other.
You've got another 5 minutes or so. Go ahead.
Oh, super. Okay, good. Let's take a look. Before I get to showing you the actual stock, let's take a quick look. This is the utility sector. XLU is the ticker symbol, and I will tell you it is certainly in the top 3 as far as the year-to-date performance, super outperformance in some of these utility stocks. And of course they are defensive. The average yield is about 3.3%. When the markets are rocky and uncertain, you'll see a move. But there are some growth elements to some of these utility names as well. One, Tom pointed out, some of these home builders, really explosive. There are brand new communities that have need for these utility services, but also alternative energy is finally coming into its own. So I'm going to share with you a company, NEE. This has been on the MEM Edge suggested holdings list for quite some time. You can see this very nice significant uptrend. This is Nextera. This company is very involved in alternative energy. I believe Warren Buffett is a big shareholder, but let's take a look at the stock because it really has been in a bit of a trading range here of late. They, as I mentioned, are due to report. And I would argue that this company is an example of one, in addition to being a defensive play, it also does have those growth components to it, a nice 2.2% yield, and they are due to report next Tuesday. So keep your eye out for that one. And then we have a couple of defense-related stocks. One of the bigger known is Lockheed Martin, LMT, another big winner for us at MEM Investment Research, but more recently really languishing. A lot of these defense-related stocks, in addition to having growth prospects, they were also viewed as defensive simply because next year's budget, proposed military budget, is going to be at a record high yet again. But I will tell you Lockheed Martin is not the only one. These guys are due to report on Tuesday. However, they do have a very good history of reporting ahead of estimates. This is one of their more recent quarters back here, gapped up on earnings, continued to carry on. Another nice report here. So in this period where the stock is relatively inexpensive, certainly relative to its peak in price here, we could see, if they do come in ahead of estimates, a nice surprise, certainly based on history. And then one other defense-related stock is Northrop Grumman. And you can see here, this is what I'm talking about in line with other names in this space. They've lost their near-term luster, but Northrop Grumman is another one due to report next Thursday. And this is another one. Take a look at this gap up here. This is the end of July. Company came in with very good earnings, and we can see Tom touched on this a bit, but that concept of waiting for that pullback for your entry, and the stock did of course go on to higher highs from there. I'm going to leave it at that, Tom, and let you share some of your wisdom.
All right, that sounds good. I tell you what, I'm going to go ahead and start with a couple of individual stocks that will be reporting next week. And then I'm going to go into more of a theme that I talked about earlier, which was simply looking in the industrials. So let's start first with CDNS, Cadence Design. This is a software company. And this is one that I think is going to be very interesting as we move forward. So should have the screen up there now.
There you go. Good. Couldn't see your screen.
CDNS, Cadence Design. So they report on Monday, and you can see the stock's been down for the last 2.5 months. Software, was a darling of Wall Street for a few years. August and September were not kind to a lot of the software stocks. Cadence, though, did hold on to its prior low at June, so it hasn't lost that. It did, move up above the 20 and the 50. I think this one is poised actually to have a good report. When you look at the relative strength, yes, it lost a little bit over the past couple of months, but many stocks did that. I stretch this out and look on a weekly chart, and I think Cadence just got too far ahead of itself. I mean, you can see after moving up in 2017, the sideways consolidation, the breakout, and what I think was most problematic is it just got so far ahead of itself, it began to lose its momentum. So on this move to the upside, you can see the price action kept going higher, but look at the weekly PPO. It failed, and then you've got a reversing candle, the bearish engulfing candle at the top. And so I think right now we're working out those issues. The PPO has come all the way back down near the center line, and when you go back and look at this stock in the past, when it's gotten to the center line or just below, that has been a great time to get into Cadence Design. So I think that this recent weakness, I think that Cadence has kind of fallen off the radar of a lot of folks, but I'm going to be watching this report, not just for the individual stock, but also for the sector, because this is one that maybe could begin to get some money rotating back into the software group. So CDNS is certainly one I'm going to be paying attention to. Another stock that I am going to pay attention to, and this is a company reporting on Tuesday, you've probably heard of it, McDonald's. I'm going to be waiting for their McEarnings report because this is in the restaurant space. And when you look at this chart, they were, here was the restaurant group going up. McDonald's just kind of went along for the ride. It's not that they were a bad performer. I mean, again, look at their chart. It was straight up. But restaurants have been incredibly strong until August and September. Believe me, that's been a theme. A lot of things that were working heading into August have not been working much over the past couple of months. But McDonald's, I think, is one that a lot of folks are going to be looking at from that restaurant space to see if maybe some of the relative weakness we've seen the last 2 months in the restaurant stocks is maybe a bit overdone. So I think McDonald's will be a big one. Another one and a leader in this group that I think everyone's going to be waiting for is going to be Chipotle. CMG, the stock today up $15. You can see on the verge of another breakout, even though the group has been going down the last 2 months. So what does that mean? It means CMG is leading. It's breaking out to a new 52-week high relative to its restaurant peers. The market, and the best way I can describe relative strength is that it's kind of a cheat sheet into what Wall Street likes. If you can see a stock that is showing great relative strength, there's a really good chance Wall Street's been accumulating the stock. And if you think about it, Wall Street has the ability, they have abilities we don't have as individual traders. They send their analysts out, they meet with management, they talk to them about their product line, how are sales going, what's the competition look like, are you going to open up new stores, what's that look like going forward, what are your projected growth rates, well, how's overhead. They go through all of that, and then they go back to their office and they buy for themselves and for their clients. So when you see companies that are outperforming, like Chipotle, There is nothing I'm expecting from their earnings report except blowout numbers. I think they're going to have another big report. I'll be shocked if they don't, because in theory, if analysts are going out there and they're hearing maybe some not so good news, they would be coming back into their office and selling. But that's not happening here. In fact, what I'm seeing, equal highs coming across, rising lows. I see an ascending triangle, which is a very bullish pattern. I think Chipotle goes higher. So if I'm looking at McDonald's and I'm looking at Chipotle, I think Chipotle is going to have the better report. But McDonald's is reporting on Tuesday, and that is going to be one that I think a lot of folks in the restaurant space are going to be looking at. Similarly, in a different space, we can look at Texas Instruments that also reports on Tuesday. Texas Instruments just broke out to a new 52-week high. You can see semiconductors trying to make a breakout. Semiconductors have been strong here in October. Texas Instruments on a relative basis has gone back down, but it was at a 52-week relative high to start the month. So I think all you're doing is just seeing a little bit of consolidation here. I believe that Texas Instruments is going to post a good number coming up on Tuesday. Now, is it going to be enough to carry the group to a breakout? That remains to be seen. And as we've talked about plenty of times, just because a company comes out with a great report doesn't necessarily mean you're going to get this blowout push to the upside. A lot of times companies, because they've been trending higher, a lot of good news is already built in. So you have that old Wall Street adage, buy on rumor, sell on news. That was, getting back to Helen of Troy that I showed you earlier. That was that HELE chart. When you look at a stock that's been going up for 3 months heading into the earnings report and it gaps up, all of a sudden there are your sellers. And the folks buying at the top at 170 don't understand why the stock's at 148 the very next day. But that's the way the stock market works. It preys on our emotions. So I would just, concentrate again on the long-term picture, the uptrend that's in play here on Texas Instruments, the outperformance that we have been seeing for months in the semiconductor space. I think Texas Instruments will have an opportunity here to get things started pretty well for the semis. One other individual stock before I get into this theme I want to talk about is UPS. United Parcel reports on Tuesday. Now, you're going to look at UPS. Let's take a look at FedEx and tell me if you see different charts here. FedEx going straight down, UPS going straight up. Which one would I rather hold into earnings? I would rather have UPS. This is one I think that clearly is being accumulated. This was its earnings report back in July. Huge move up, 3 white soldiers for you candlestick fans. Notice we never went back to fill this gap either. We didn't even quite get back to the top of gap support before we started pushing higher. I think right now we're sideways consolidating in UPS, but I think we have an opportunity maybe for a big move here. When you look at UPS relative to its peers, it has been on fire. And even though the group overall has been downtrending versus the S&P, UPS has been able to outperform the S&P. So I think UPS is one to watch on Tuesday. All right, I want to get into a little bit of a theme here. And the reason I want to get into a theme, let me explain a couple things. A lot of people have forgotten about the industrial group, and that's normal. That's what happens. Different groups lead. I like to follow the aggressive groups, which includes technology, consumer discretionary, communication services, industrials, and financials. Those are the 5 groups that I am most interested in trading, because in a bull market, which I said earlier, I think we are in the midst of a secular bull market, aggressive groups lead. So if I want to beat the S&P 500, I'm going to find a lot more opportunities in these aggressive groups. Now, when you look at the industrials, you say, well, on a relative basis, and that's what this chart is, industrials, the XLI divided by the S&P 500. So for the past 21 months, we have been going down on a relative basis on the industrials. We did the same thing when we consolidated back in 2014 and 2015. We went down. But then when we finally broke that, look at what happened to the industrials. I know a lot of folks thinking about 2018, 2019 have short-term memories. But 2016, at the end of 2016 and throughout 2017, industrials and financials soared. And I think we're going to get to the point where they're going to soar again. So this is one thing that I'm looking at. Look at the long-term trend line. And we are squeezing now between this short-term downtrend and long-term uptrend. And I'm going to bank on the long-term uptrend holding. So I'm looking for a breakout. So what could drive that breakout? Well, here's a chart that I love to point to. This is going back 10 years. S&P 500 on the top, transportation stocks, which are part of industrials, on the bottom. When the S&P 500 goes through these consolidation periods, look at what the transports are doing. Transports are doing nothing. It really gets back a little bit to the Dow theory as well. You want a strong transportation group, and when the transports start moving, that's when the S&P 500 flies. I think you can see it here on the chart. Transports going up, S&P 500 rallying. Transports flying, S&P flying. Transports flying, S&P flying. Same goes really for the small caps as well. Small caps, you can see, tend to struggle during periods of consolidation. But when the market gets going, a lot of times we'll get that strength of small caps. So that's something else to watch. Down here on the bottom is a correlation between the S&P 500 and the transportation index. If you're not familiar with correlation, all it does is it fluctuates from -1 to +1. Anything in positive territory means that there is positive correlation between the direction of the S&P and transports. And if you get up to 1, it's perfect positive correlation, meaning that they go up hand in hand. And if you look back over the last 10 years, you can only see a couple of instances where we go below 0. Transportation, you have got to keep an eye on transportation. So that's going to lead me in to checking out some of these transportation groups in as far as earnings coming up. Now, when I look at the industry groups, I've got a chart list where I have all the industry groups set up relative to the S&P 500. And then let me just go back and show you how we can get into this. Let me just pull up. So I have a chart list. I can come down here under relative strength. This is my industry group chart list. So every one of the industry groups is in this chart list relative to the S&P. This is a 3-year relative chart, weekly chart. So for instance, computer services, IBM just came out with a not so great report. Computer services relative to the S&P 500 just broke down to a new low. This is a group I'm not interested in. When you've got a group that's trading like this, new 3-year relative low to the S&P, for the most part, unless the stock is absolutely a crazy outperformer, I'm not going to be interested. But what I can do with this entire list is under View All, I can go in and set up a summary. And now this is what's going on today. These are the groups that are leading today. But I can go in here and say, what's been going on over the last week? And here it will tell me which groups have been outperforming. This doesn't mean that aluminum is up 6.49%. This means it's outperforming the S&P by 6.49%. And then as you go down the list, you can see the different groups. Now, I'm interested in the industrials. And one of the groups I want to focus on here is this transportation services group. Why do I like it? Well, the group has been beaten down for a while. And look at the movement now. We are moving to almost a 2019 relative high on transportation services. So if you've got transportation services breaking out, you can see that the relative PPO just trying to go positive for the first time in the last 18 months or so. So why would I be interested in earnings reports if I've got a group like this that maybe is on the verge of a breakout? Well, it should be obvious. I mean, I want to know which companies could be driving this transportation services index higher. So one of the stocks I'm going to look at is Copart, CPRT. So let me go over here. We'll bring up CPRT. And I'm going to pull this up on a relative chart. Now, they report in another month. We got time on this one. But this is going to be an important trade. You can see the huge move up here with earnings. We pulled back. Notice we didn't go all the way back. Actually, there really wasn't that much of a gap up. But we came right down to the top of this gap and put in a bullish engulfing candle, moving back to the upside. Copart is one that I'm very interested in the transportation services group. If it continues to strengthen, I mean, look at the stock relative to the transportation services group. It's been up near a 52-week high for the last several months. So if transports are truly transportation services, if we can go through and get this relative breakout up here and move to about an 8-month relative high, I think that would be very bullish for stocks like CPRT. Another one in the space, XPO Logistics. They report October 29th, so a little less than 2 weeks. But this is one that had the huge decline back at the end of 2018, has begun to right the ship. Very similar to, I think, a little bit of what Mary Ellen, and you can chime in, Mary Ellen, if you think this looks good. But, it's been holding that 50-day for the most part, rising. And when I look at it relative to its transportation services group, it just broke out to about an 11-month relative high. So I don't know. What do you think of XPO? Is this something you'd be interested in?
Yeah, I think it actually is setting up quite nicely. I've been actually keeping an eye on that because it does tie in, of course, very naturally with the move. You've talked about KSU and I mentioned JBHT. We're seeing these transports coming in with good numbers, and there is always going to be a need for these logistics companies to do their thing. It's a little bit extended. I like to see it, and you did touch on that. So if we see a little bit of a pullback, but it's really acting quite well.
Yep, I agree. And it's funny you mentioned JB Hunt, because when I came into this week, of course, I wanted to see what the banks were going to do. That's a really big part. And I could spend, 20, 30 minutes talking about the banks, but a lot of them have already reported. And we mentioned some of that. I know you went over some of that. But when I was looking ahead, JB Hunt this week and Kansas City Southern were two of my favorite targets to watch. Not just their earnings, but how the market reacted to those earnings. And both of them, we've seen strong reactions. And I showed you the chart. I showed everybody the chart with the transportation index and how, if that breaks out to the upside, how important that is to carry the S&P 500. Here's another one in the transportation services group, Aircastle. And I've just got a couple more and we'll wrap this thing up. But Aircastle breaking out here. Volume a little bit less than we see on some of the other stocks, but it's still okay. They report on October 30th. So here's another one trying to make a breakout before it's
and that Aircastle has a nice 5.1% yield.
Oh, wow. Yeah, I didn't even know that. So great
Bonus
stock. Yeah, for income-oriented folks too. All right. I tell you what, I will go into the recreational products. I know this is in the consumer discretionary, but let me pull that chart up for you and just show you why I like that. So let me find it up here. Here we go. So recreational products also had been in a downtrend. Look what's happening though. All of a sudden, on a relative basis, we're breaking above our moving averages. Again, first time in about 18 months, trying to get, and actually we have gotten a positive relative PPO. So this group is starting to show relative strength. So what stocks within this area would I be interested in? Well, Winnebago reports on 10/23, so they're coming up within a week. And look at the way the stock's been performing, holding the 20-day moving average, breaking out, volume picking up on this move to the upside. Look at the relative strength. It's up near a 52-week high relative to the group. Recreational products just breaking out. These are the types of things that I look for in terms of character change in the big picture of the market. Callaway Golf reports October 25th. Same type of thing within the recreational products, moving higher, breaking out before its earnings report. How about Yeti? A lot of folks giving up on Yeti because it's just been sideways consolidating. I think if you pull up a weekly chart, you'll see a little different picture. This thing went up a lot, and it's just consolidating. But this is another earnings report. They come out on October 31st. And then the last one I wanted to show you is Garmin. Garmin also getting close to a 52-week high and on a relative basis performing very well. And they will report, as said, on October 30th. So these are some of the things I'd be looking at. I mean, I could have gone into a lot of the Apples and Intels and those types of companies, but there's a lot of other companies that you should be paying attention to that fit into bigger picture themes. And industrials and financials could be the next leaders. I mean, we've been talking about technology and consumer discretionary, and they may continue to do well, but these others that have been languishing for the last couple of years could actually begin to pick up the lead here on a breakout on the S&P. So that's why I think we need to pay attention to some of these other groups.
Yeah. And in that recreational products, I think you talked about Pool earlier, right?
Yes.
Yeah. They had a good
that was
report.
Another good one. Yeah, very good report. Nice gap up there. Let me ask you a question on this one, Mary Ellen. If you see a stock like this and it gaps up and then it trades back down, are you looking for a 50-day test? I mean, if you were looking at the stock and you wanted to get in, what's your strategy in trying to get into a stock like this?
Yeah, Pool really is unusual in the sense that it had a much bigger gap up on the day, and it really closed on the lower half of the day. So that's not constructive, but that said, that 205 level is the breakout of about a 6-week base. So you are in slightly a bit out of a buy zone. And I'm going to look to see how it settles. And oftentimes these stocks will back and fill, and then that 10-day shorter term simple moving average might catch up to it. But overall, yeah, looks constructive.
So I guess to paraphrase, you're looking for a pullback?
Either a pullback or a sideways back and fill as these moving averages catch up with it. Those are your two possible dynamics, and it's holding in nicely today. So we could see from here more of a consolidation, more of a sideways back and fill. It does not appear to be pulling back. So
you missed my pun.
Oh,
my pullback.
Oh gosh,
I know. You haven't been around me long. It's been a while, so you're probably not used to it.
Tom.
All right, it is time now for some Q&A. I know, Aaron, you have been patiently waiting for us to get done here, but we have some questions.
Yeah, absolutely. Our first question is for Mary Ellen, and that is, where can I see which companies are due to report earnings?
Oh, yeah, that's a great question. Of course, you want to know that. And I would say there's a lot of actually free services out there. You can quite simply go to Yahoo Finance and they'll list the companies due to report actually by date, and then you can sort it other ways as well. So good question.
All right, we have another?
Yes, this question is for Tom. Do you always wait for earnings gaps to fill back to prior closes?
No, I talked about that a little bit during, the presentation. I will just, pull up a stock here, ZBH, for instance, which is one of our current trade alerts. Waiting for a stock to come all the way back down here. Let me annotate the two key levels here. I think this is the one I have in my blog article today too, so you can always go back and look at that. But here is where we had closed prior to earnings, so around 123.5. The next day we open at 130.5. Now I said earlier, I don't do anything. I mean, if the company comes out with great earnings, it gaps up, I don't do anything, because a lot of times it's that emotional whipsaw that gets you in trouble when you buy right at the time the earnings are reported. I think that is not when you want to go, because you really don't know which way the stock's going to go. And I think it matters which way it goes. So in this case, ZBH traded up after its gap up, continued rising for the next couple of weeks, and then eventually it comes all the way back down and tests this level. So during this whole period, I mean, I guess, when it hits the 20-day, maybe there's a trade in there. But I really liked ZBH when it came down and hit this area of support. Not only is it a really good stock, but it also is in the medical equipment group, which has been a tremendous performer relative to the S&P. ZBH, after bottoming here about 4 months ago, has been uptrending relative to medical equipment. So I've got one of the best stocks, and the primary reason it's been uptrending was that last earnings report. So that's a game changer a lot of times, and that's why I focus so much on earnings. I know that's why Mary Ellen focuses so much on earnings, because earnings matter. And so when you get back to the top of gap support sometimes, that can be a great entry, and I don't look for the gap to fill. Now, maybe it'll fill 6 months or a year from now, but I'm not going to be holding a stock 6 months or a year. I'm looking for a short-term opportunity. So I think when you get these moves back down to test the top of gap support on these kinds of trades, I think it'd be a great opportunity.
Awesome. So I know we've talked quite a bit about when to purchase a stock after a gap up. One of our attendees asked, do you ever see technical signs that would help one buy low rather than buying high after a gap up?
Mary Ellen, what do you think? You got any?
Yeah, well, that's where I spoke to using that intraday chart can be really, if you really, really want to get super refined with your entry point, because oftentimes that's going to give you the very near-term clues as to how the stock may be poised to perform, because you're also not only going to look at the technicals, but the volume characteristics. So I would point you to that as far as really refining your potential entry or exit points. And
are there any stocks that you can think of? I mean, I was going to just try to show a stock, and I mean, Helen of Troy was one. Obviously, we got the gap up and then it came down. I'm trying to think of a company maybe that has reported good results and went down after earnings and maybe provided an opportunity. I know we're early in earnings season, but can you think of any?
Yeah, actually, I was going to say RLI, but it didn't really come back in. It's kind of pulling back a little bit, but again, that intraday might be helpful, but let me just see if we have
Well, I
any
know
other.
something like SNBR that you pointed out earlier. You know, we
Mhm.
had the gap up with earnings, so but then you can see it came down after earnings, went all the way back down almost to its 20-day and was down $3 from the prior day's close. So if you get a company that's come out with really good earnings, sometimes even when they're down, they're great opportunities. And I would look to something like this where Sleep Number was showing really nice relative strength and has been showing it again here in October. Sometimes you get those gap ups and then they pull back and they give you an opportunity at the lows. But that's really my strategy. I don't like to chase these gaps to the upside. I put them on a strong earnings chart list and they stay there until I start running scans. And one scan that I really enjoy running against that entire list is an RSI 40 to 50 scan. So in other words, when you get these companies that gap up like this, I wouldn't even begin to consider them until you start seeing the RSI drop into the 40s, 50s. This one went a little bit further down into the 30s, but you can kind of get a sense. We've got an uptrend. You have opportunities to buy these later. There's thousands of stocks out there. Don't marry one or two that you feel like you have to trade. I think there are a lot of opportunities out there.
Okay, great. The next question is referring to target price, and Tom or Mary Ellen, feel free to chime in. So when deriving the risk to reward ratio, how do you determine the target price? So for example, if a stock is in a trading range within 97% of its 52-week high, do you have a rule of thumb to determine that?
Mary Ellen, I know you tend to stay with a stock for a while as long as it's
I do. As long as it's trading and that trend is still trending upward, I'm going to stay with it. I don't do a lot of work with price targets. I will, I'll ride it into the sunset.
Yeah, I mean Roku had a horrible pullback, but at the same time, when you get a stock that goes from 55 to 175 in 5 months, these are the kinds of stocks that are going to get hit from time to time. And when they do, they're not going to have a 3% pullback. They're going to get hit hard. And anybody chasing toward the top is really going to find it difficult emotionally to stay in that trade. But if you have a longer term time frame and you're enjoying all this move to the upside, then you just have to understand, I think, that you've got to give it more room to the downside. I mean, would you agree with that?
Yeah, I have to tell you, I don't know that I would have, Roku did get a little hairy there once it breaks its 50-day and the volume was absolutely off the grid. I would then potentially look elsewhere, put my money to work elsewhere and wait for it to reconstruct similar to that entry point. I don't know if I would have been, you seem to have nailed that entry point, but when that downtrend starts reversing, I'll go ahead and revisit.
Yeah, well, in Roku, this one, it takes a little bit of a strong stomach, no doubt, when a stock is selling off from 175 to 100 in, just 2 weeks, 3 weeks. That was pretty painful. There's no doubt about it. But when we put it out, we just talked about that, hey, at some point you've got to just make a stand where you believe a stock is going to turn. And so when I look at this, I saw Roku coming down to about the 99 to 101 area. 101, I think it was 100.97. I think was that close before earnings, and it went down just a little bit below that. Got down to maybe 99. It may have touched the 98s, which was the prior low right before the gap up. So we had a very tight stop, and we could have gotten hit. I mean, Roku could have had another big down day, and we could have gotten stopped out. But I just felt like that was an area on the chart where I would see buyers come in because we had a ton of buyers coming in with earnings from that 100 level. And it just seemed like technically that was a good area to get involved. And it proved to be a good one. They don't all prove to be that way. And I can show you one. I don't want anybody to think, oh my gosh, Tom gets all of them right. Because I had EHTH.
Oh, I remember this. Yeah.
Oh, yeah. And I loved this stock. Where was it? It was at the 50-day and at price support. So let me show you. And let me show you how important putting a stop in. Because right there is what we liked. We had gapped up above this prior high. It had pulled back and held, went back up, pulled back. And so we were thinking, okay, this is going to hold right in here around 95. The 50-day moving average was about 94, 93.75 or something. I remember we had a stop in here on a close below 93, and I think it closed here at 92.75. If we didn't have a stop in and we just married the stock, this would have gotten extremely painful. So they don't all work. And sometimes, and I always say, sometimes your best trades are your losers, where you take a small loss and you avoid taking the big loss. Anybody who remembers back in 2000, 2001, or maybe when you got hit in 2007, 2008, when stocks break down below support, if you hold and they just continue going down, I mean, it is physically difficult. It's not just emotionally difficult. It's physically, it starts to wear on you physically. So I always say, and I don't care if you're a short-term trader or a long-term buy and holder, there's got to be a point at which you just don't want to take any more chance to the downside. Don't risk your capital, because that's your product as a trader or as an investor. If it's your business, if you're looking at it like a business and you want to make money, that's your product, is your cash. So you want to be careful you don't lose too much of it on a particular trade.
Yeah, and that's that break below that 50, and you can see that pickup in the volume. That's going to be telltale.
Yep, and I actually looked at this and I'm thinking around this 50, here's a gap support. I was thinking 50 to 55. This one's been overdone as well. Now, my guess, because it just hasn't seen much of a pop at all, that they're probably going to be lowering estimates if they haven't already. There's something else is going on here with this stock to fall that much. But it is another one that's somewhat similar to Roku if we pull it up on a longer term chart. And I'm going to pull up on a 5-year weekly chart. Now it doesn't look quite as bad. It's still been a big drop, but look at where this stock came from. I think it could hold this 50 level and start to reverse back up. But again, it would be risky losing, because technically it's got some issues for sure.
Yeah, and they are lowering estimates, but certainly not to the extent that would be warranted.
Right. All right, Aaron, maybe one more question. Do you have any more?
Sure. This one is for Mary Ellen, and it is for a longer time horizon. What do you think of Amazon and Apple?
Sure. We can take
the Amazon.
Oh, thank you. Yeah. Yeah. So taking a look at Amazon, it actually longer term, and are we looking at
This is a 5-year weekly chart.
Oh, perfect. Yes. So certainly it does look to be rather constructive overall. We're not in any kind of an uptrend. Unfortunately, for the last 3 months, we've been in a very tight trading range, go nowhere environment. Mm-hmm. And oftentimes with names like Amazon, it will take an earnings. It'll take some kind of significant shift to bring that uptrend back into play. So with an eye toward that 2017 similar time frame from that June into October, and take a look at that gap up in October 2017, and that was earnings related. So it came out of that tight range. This is how Amazon tends to trade. It will be in this lumbering go nowhere environment. You can put your money to work elsewhere, but inevitably you'll get a nice uptick on a strong earnings report. So we're on the lookout for that next week.
Yep. And then what was the other one, Aaron? Was it Apple?
Oh, yes.
Yes,
Apple.
It was Apple.
Mm-hmm.
Right. Do Apple on the weekly. What do you see here?
Yeah, and of course, Apple looks quite a bit more constructive. It's very much in a confirmed uptrend. The other thing you can do for longer term, not many people do it, but institutions that I've worked with, they'll look at a monthly price chart. And the beauty with that is if you can I put a 6-month key moving average. And if you really want to stay with your stocks, use that monthly chart. It's going to keep you in. And these are what the institutions are looking for. They're not looking to trade these stocks around. And you can use that 6-month as your support. And you'll see that Amazon does, in fact, look very constructive on the long term.
Yeah, I'm surprised I never heard of this company. And it's been doing well for a long time. All right, anything else, Aaron?
We have quite a few questions, but I know we're a bit limited on time. So maybe if you all want to just provide information one last time where attendees can reach you, I think that might be the best way.
Do you have those questions that have come in?
I do, yes.
And can we respond individually?
Sure.
Okay. Why don't we do that? we'll try to spend some time. I don't know if I'll get to the questions for me today, but I'll try to sometime over the weekend. We'll try to.
Yeah.
Why don't we end it? Why don't we end it with one more question each, and then we'll try to answer the rest by email.
Yeah, absolutely. Let's see. So for either of you, what is your exit strategy for stocks?
Yeah, I think we did touch on that. And for me, that 50-day simple moving average is the line in the sand, so to speak. But it's not a really strict, gosh, that's going to sound waffly. But if I do see a stock break below that 50-day simple moving average on volume and the rest of the market is just sailing upward, that is going to be a signal for me. But more recently, I've been a bit forgiving. This August, September period has been really tough. So I've stuck with some of the names that just barely broke below that 50 and stayed in a nice trading range. Tom?
Yeah, I'm glad you mentioned volume, because I do use volume a lot in my analysis. And sometimes you'll see a stock go below its 50-day moving average and the volume's not that great. Or it goes below the 50-day moving average and it's still holding on to prior price support and maybe close to that price support level. So those are a couple things that I would look at. But when I get into a trade, I know where I'm going to exit. So, and when we send out our trade alerts to members, we provide a stop. It's usually a closing stop, because here you can see, let's say in this case with JP Morgan, you wanted to set a stop on any move below the 50-day moving average. Well, to me, that's too tight, because you can see JP Morgan traded below the 50-day moving average, but then came back up and closed above it. So a lot of folks may have gotten stopped out here inappropriately and too early. And so I think that it's probably best to use a closing stop. Now, if it's a really volatile stock like Roku, I mean, you could have a stop on a close below 120 and the stock might close at 103. It might be down 29 points. I mean, you've got to, you have to use a little bit of judgment too, based on the type of stock that you're trading. And with a Roku, I'd probably use an intraday stop and just realize, you know what, I might get whipsawed. That's part of trading a stock like that. So it really depends on, and I'll waffle a little bit, I guess, like Mary Ellen was. It depends on a lot of things going on in the chart. But if I find a key support level and we close below it, I tend to honor that, because I think it's better to take a small loss and have a stock reverse on you to the upside than to ignore taking that small loss and have that thing build into something big.
Yes, there is an art to it for sure.
That's the hardest thing in the market, I think. I think deciding to sell, I think, is the hardest decision to make whether you're trading or investing for the long term. You get a stock, look at all these energy stocks the last 8 years that have been going down. Anybody diversifying that's been in energy, holding energy stocks, most energy stocks for the last 8 years, probably not too happy, because they just haven't been very good performers. All right, we have one more, Aaron?
Yes. The last one is, what do you think of SHOP and what do you think of AYX?
Oh, boy. What do you think? I'm going to pull up SHOP first, and I'll give you, what do you think?
Yeah, SHOP is due to report in about a week and a half. That stock, of course, software names have been getting hit. It's among them. But I'm really keeping a close eye on this, because as these software stocks are starting to potentially turn, we could see a rotation out of these former leaders. So Shopify, earlier in the week, some of the other software names were starting to firm up and look really constructive, and not so with Shopify. So, but right now it is below those key, we talked about the 50, so it's below resistance. And you really have to look at the overall group. I think IGV is the ETF that I use. And I would tell you that these software names just aren't, they're not ready yet. They still have work to do.
Yeah, they've started to show a little bit of relative strength, but I think a lot of that's coming from Microsoft, because if you look at Microsoft's actually been a pretty good performer, just broke out to a new high just a few days ago. That's unlike everything else in software. So, or not everything else, but it's certainly outperforming most software stocks. And the other one is AYX. I'll go ahead and take that one. Yeah, this stock really is struggling, down another 588 today. This is actually, let me annotate this, because when AYX came down here earlier around 107, 108, I had talked about maybe another 10% on the stock. I actually think if we could get a recovery here off of the 200-day moving average, I think this could be a major bottom on AYX. But it, like Roku a few weeks ago, it would be a really hard thing to pull the trigger on because it is very, it's been heavily traded to the downside. It's actually been heavily bought back to the upside too. So I think there's a little bit of a back and forth that's taking place right now with AYX. I would look for a reversing candle because if we get a hammer today, testing this area, this breakout level, which we went soaring through back in June, if we could get a hammer here, I think we'd have a bottom in because you got a positive divergence, higher PPO, lower price, reversing candle. I would get in and then I would use today's low as my intraday stop. But again, that's a lot of ifs in here. Let's see how the stock trades the rest of the day.
Yeah, you're really going to want to pay attention to those other key technical indicators, whatever you may use, but that RSI is just down and out, as is the MACD. So I would need to see that confirmation before considering entering.
Yeah. Yeah, I'd say maybe that's one difference that we have in that I will sometimes try to catch a bottom, especially if it's a stock that I think maybe was just way overbought. When I look at this, this is another one that's very similar to Roku. It looks horrible on the daily chart, but when you pull up a weekly chart, this thing had been going up almost every single week throughout 2019. And when the sellers kick in, you got to remember a lot of people buying at the top aren't going to have the same patience that people have that maybe bought at the bottom. Anybody buying at 145 on AYX, not going to have a whole lot of patience when the stock 5-6 weeks later is at 96. There's a lot of panic selling going on here. I don't know that it's fundamental selling. And this would be an area, this along with this stock since it went public has not traded below the 50-week moving average. So I could make arguments for AYX for a reversal, but this would be an earnings report definitely put on the list to watch. If they come out and say, hey, everything's great, then we'll know it was just a bunch of panic selling. All right, I think we're going to go ahead and wrap up with that, but we will, Aaron's going to send us the questions that were sent in. We'll try, I have no idea how many questions we have, but we will try to get back to everybody and answer those questions at some point over the next few days at least. I do want to say, Mary Ellen, it's been great having you here. Really,
it's been
go together.
Yeah, it's fun. Get a little taste of our good old days.
Yeah, absolutely. And I do want to, encourage everyone. Both of our services, MEM Investment Research and EarningsBeats.com, both have $7 trials for 30 days. Not much money to invest. I think you can see that we try to keep our finger on the pulse of the market as best we can, not just for us, but for all of our members. And we'd certainly love to have you try our service out. But let's go ahead and wrap this thing up. Aaron, thank you so much for the administration portion of this. And Mary Ellen, thanks so much for joining. And look forward to doing another one of these pretty soon.
Sounds great. Have a great weekend, everyone.
All right. Everybody have a great weekend. See you later.